Hello, folks, and welcome. The disclaimer, sorry about that, but we always have to run it. It really just says everything we're talking about is informational and educational. We're not giving you financial advice for anybody that might be looking to go after us for that, Dan. But folks, I'm lucky enough to have Dan Held here with us from Kraken. Dan is the Director of Business Development at Kraken, and he has been a Bitcoiner and involved in blockchain since at least 2013, because I see that he was the director of product over at blockchain in the San Francisco area. And if you looked through his CV, folks, like I have, you'd see that for the most part, you'd want to follow Dan wherever he goes because those companies tend to get bought. I mean, for instance, I see at Change Tip, where Dan was in 2014, they got acquired by Airbnb. And Uber hasn't been acquired yet, Dan, but the last company you were with, Interchange, was, of course, acquired by Kraken. And now, as I announced already, you're the Director of Business Development over at Kraken Digital Asset Exchange. And like I say, I could do a lot worse than following wherever you go, as far as using you as the bloodhound for that.
Well, John, appreciate the kind words. Thanks for having me. I'm crossing my fingers that Uber does get acquired because my Uber shares have been dropping quite a bit. So that'd be a great thing to happen.
Yeah, well, they'll probably rebound a little bit because they ended up not getting Grubhub, not having to spend that money, and instead that went to a company over in Europe. And I wish them a lot of luck for the 7 billion they spent on it.
That's a lot of money.
Yeah, and it's not like it's not a crowded space, Dan. I mean,
it's super competitive. I mean, one of my roles at Uber was on the competitive intelligence team where we quantified the P&L and other metrics for these companies. And this was 3 years ago, so I feel comfortable talking about it. But this competitive intelligence team, like digging in on these metrics, people forget that like Uber doesn't just compete with Lyft. Uber competes with tons of ride-sharing companies all over the world. And then on the food front, you're right, the food space is ultra competitive. So it's not going to be an easy run for Grubhub or Uber Eats after this. I think it's going to kind of be a in the trenches sort of hand-to-hand combat battle between these two companies.
Right. And Postmates, Seamless. I mean, there are so many of these companies that do the delivery, just like you said, Dan. Everybody thinks of the two biggies, Uber and Lyft, and yet there are, three others in Minneapolis, of all places, three other ride sharing companies in Minneapolis. And that's before you get into the Gets and many of these other ride sharing taxi apps that are a little funky. And I don't know if you've ever done it, Dan, but I've actually been in a gypsy cab in New York. These are the weirdest things ever, by the way. A gypsy cab, since I know you're a Texas guy that now lives on the West Coast, but in New York, they have gypsy cabs. And for the most part, a gypsy cab is a van that pulls up with the side door open. And if you want, you can jump in that van. And it's usually $1 or $2, and you ride with them in the direction they're going. And then you say, okay, I'm out. And you get out.
So it's kind of like a ride sharing, just like a perpetually looping sort of van.
Yep. It's just
nice.
like that.
Super cool.
Yeah.
Well, in Texas, we have horses. So we got like a couple horses hooked up to a wagon. Same concept, but different drive mechanism.
Right. Well, the fact that you're so involved in alt currencies, I'll call it, and blockchain. I've been involved since about 2016, Dan, so not nearly as long as you, and I wish I was, because then I'd have more. At least I think I would. I might not. I mean, if I owned it where you probably first started buying it, I don't know if I'd still own them all. I had the good fortune of meeting and calling Charlie Shrem a friend, and he said, John, best thing that ever happened to me was the government throwing me in prison and not letting me sell any of my coins for whatever, 11 months. because he said that was right when it was doing this. And he said, I'm sure I would have been tempted to get out.
Oh, yeah. I mean, especially after you have 10x gains. People in Bitcoin and crypto, we don't talk about 10% gains, 20% gains. We talk about 100%, 200%, 700%. And it's really hard to, as the term goes in the space, hodl. So hodl represents the ethos behind holding on to your crypto asset. I started with Bitcoin, holding on to your crypto asset despite the big booms and the busts. So I've seen my net worth in 8 years go up exponentially 3 times and drop 80% 3 times. So after this asset class, I think any other asset like real estate, stocks, bonds, I'm kind of like, cool. So it's based on something real, something tangible. There's an actual company behind this equity. There's a real tangible home I can touch and feel. So I think after this asset class, it's sort of been, I've been weathered and worn by the volatility and kind of grew up with that, which I think it's an interesting perspective to have as a young person, to go through such intense volatile swings. And it required a really big conviction in this asset. I think when owning any asset, you should enter with a good investment thesis, choose an exit price, choose like a strategy. And, with Bitcoin, it's just like all the other ones. And my original investment thesis was that Bitcoin would be gold 2.0. That is kind of like the digital gold. Mm-hmm. And it hasn't yet touched upon that. Even though we've seen Bitcoin move from 10 to 100 to 1,000 to 10,000, the market cap of Bitcoin is only $180 billion. Gold is around 10 trillion. Apple alone is 1.5 trillion. Bitcoin has a long ways to go. And so it's been an intense, long hodl, if you will. But I think now, like, a lot of the risk has been removed from the market. And back when I got into it, it was worth $10 because we didn't think it was going to survive. We weren't sure what was going to happen. There were very few exchanges like Kraken and others. And so the infrastructure is very, very weak, very, very fragile. But now it's so strong, and there's so many huge billion-dollar companies across the world building and working on it, that I couldn't be more excited about the trajectory of Bitcoin right now.
And you're the director of business development for the biggest one, really. I mean, Kraken is an absolute behemoth on a daily basis. And I know that's a 24-hour daily basis for you guys. What kind of numbers are you guys seeing throughput-wise in the biggest currencies? Or if you want to just give me a dollar figure or euro dollar figure, that's fine too.
Yeah, I think a dollar figure probably for your audience is the most appropriate metric, because that's the unit of account most people think about. We do between like 250 million to $1 billion in volume daily, which is pretty huge if you look at these past cycles. So you came in 2016, which was right before the big run up in 2017. So you mentioned you thought you were late. I think you're still pretty early. You're now OG though. That's 4 years ago.
That's right.
And so we have these cycles. In the next cycle, we should see Kraken's volume. I mean, between the last one and this one went up, 50x. So, the next bull run, Kraken will be doing billions in volume a day, which would be pretty exciting. We're one of the oldest exchanges out there, one of the most secure. We've never been hacked, never had any sort of those issues, which in crypto is actually really hard to do. A lot of exchanges have had issues with that over the years. And so we've got that trust built in and that liquidity that people come and source. We're the third most liquid order book out there. So you've got a couple other companies out there like Binance and Coinbase, but Kraken is one of the oldest, most liquid, and most trusted exchanges in crypto.
Right. Well, again, congratulations for all of those metrics that you just rattled off, Dan. And as it turns out, folks, Dan and I were talking a little bit before we started about derivatives, like what I made my bones on in business anyway, Dan, is trading derivatives like options on stocks, futures. And now we're seeing more and more folks trading derivatives on the biggest currencies, at least, like Bitcoin. And that has to be a huge growth area for you guys.
It's really exciting to see the Bitcoin markets become more and more robust. Mm-hmm. What's kind of crazy is most people in the traditional equities, everyone trades through a broker. But in crypto, you actually have a seat at the exchange, which is pretty wild. Like, no one has that as a retail trader in the traditional world. And so you have direct market access, which is really, really cool. And so when it comes to these more advanced financial instruments, a lot of exchanges started with spot, and now they're doing futures, they're doing options. And I think this is really good to quantify the risk of Bitcoin to allow different participants in the market to buy and sell risk. You know, for example, if you're a Bitcoin miner, you might take your Bitcoins and sell call options because you're willing to sell your upside because you were going to sell anyways. And sort of you earn a yield on your Bitcoins as the price maybe goes sideways. So there's all sorts of really cool strategies and ways to manage risk now. We have, Bitcoin options are really popular. Those have kind of skyrocketed over the last 6 months, especially with CME. So CME Bitcoin options have skyrocketed, like absolutely skyrocketed over the last 2 weeks, just blown up in terms of volume and open interest. So pretty cool to see that happen. You know, when I got in, like there was just 2 exchanges in the space. There was, and they had maybe like a couple $1 million of spot volume a day. So to see it get this liquid, this robust, you've got spot exchanges, derivative exchanges, and the more professionalization of like going levered and the ability to borrow against your Bitcoin using Bitcoin as collateral. I think that's a really fascinating market where, for example, let's say you've got 10 Bitcoin worth about $100,000 and you want to borrow some fiat money so you can go buy a car, but you don't want to sell your Bitcoin. So you use your Bitcoin as collateral. Well, Bitcoin is a phenomenal piece of collateral. It's instantly transferable to an order book where you can go sell it. It's fungible. It's also, it's easily managed as well versus like imagine like a loan for a home, right? That home isn't fungible. A home is very different from another home. It has maintenance costs and all sorts of other things. So I think that the Bitcoin financialization, I think, is a really cool thing that's developed over the last couple of years in the space.
Absolutely. And like you probably know better than most, it doesn't hurt. At first, people, Dan, were I'd say overall, a lot of Bitcoiners weren't real happy when options, or rather when futures were listed on Bitcoin on the CME. And then short order, they were listed on CBOE as well. And it happened to come right at the end of 2017, feeding into 2018, right as we were coming off that boost that you mentioned already, where we nearly touched 20,000 and then came off rather severely. And a lot of folks wanted to blame the exchange for that because perhaps for the first time, some people that hadn't made themselves aware of other hedging mechanisms saw that they could sell some Bitcoin futures over at the CME and hedge some of their holdings. And some people surmised, sort of like portfolio insurance, which again, I think is something probably too many years ago for you to even have read about, Dan. But people were thinking that the reason markets crashed was people were hedging by selling futures and continually selling futures to try to protect the asset that they were holding at that moment. And as the asset dropped, they had to sell more and more of those futures. And so they thought it was this self-perpetuating cycle where you just keep dropping. I don't think that the listing of Bitcoin futures at CME or the ones that were listed at Chicago Board Option Exchange were the catalysts. I just think it was a little frothy in the Bitcoin market at that moment. And of course, we did see a rather dramatic correction in 2018 leading into last year, 2019, when we've seen this stabilization and now have seen it climb back up. Again, all of this is, I'm talking about Bitcoin, seeing it climbing back up to 9,200 and then maybe having that range 6,500 or thereabouts, Dan, up to about 10,500. And which end of that gets violated and stays above or below will dictate exactly, the direction for at least some folks in terms of, is it a breakout or is it a breakdown?
Yeah, I mean, I've been looking at these charts for 8 years. Bitcoin's a wild, wild beast. It's going to do kind of whatever it's going to do. It's really hard to look at direction and these channels and looking at identifying patterns and sort of the price movements. I think whenever I look at Bitcoin as an investment opportunity, I zoom all the way out and look at the macro backdrop, where we've got huge amounts of money printing activities going on with central banks across the world that will continue to happen as they try to fight the economic effects of COVID. And so Bitcoin has that as the macro backdrop. There's essentially an infinite amount of fiat chasing only 21 million Bitcoin. Now, zooming in on a more granular basis to the medium and short term, Bitcoin is still very much a risk on trade for people. So Bitcoin, I feel for most people, is this asset that they'll buy into due to the speculative sort of function, but it's not necessarily mimicking gold just yet. We've seen it sort of begin to connect with gold in terms of correlation and in terms of narrative, but that takes time to build. And it's sort of reflexive, where as more people buy into the narrative, it starts to become more correlated with gold, then starts to go up in price, and it kind of builds this self-fulfilling sort of this network effect that builds this sort of a cycle, right? So when it comes to the financialization of Bitcoin and how does that impact price, like futures, I think a lot of people look at a chart and they look at the price of Bitcoin and they see the dip and they see when futures launched, and they use the idea that like correlation equals causation. But when you mentioned like, was the catalyst, I don't think anyone can really point to that and say it was a catalyst. Like, it didn't really fundamentally change Bitcoin's architecture. It's just an enhanced method for better price discovery and better management of risk. So I don't view these, a lot of Bitcoiners are crypto natives. They're not from the financial space. So new things like that scare them a little bit. And also like lending and borrowing, they hear about fractional reserve banking in the traditional financial world, and they feel like they have like an allergic reaction to anything lending. I'm like, well, lending's not a bad thing. It's about overextending the lending. It's about having bad risk parameters, so, and that's why you earn an interest rate, right? That interest that you earn loaning out your money is to compensate you for that risk. So, I think Bitcoiners are naturally scared of the traditional financial system and some of the issues that it brought about, but I don't think that they should apply that same lens to Bitcoin and be too worried about these new financial instruments coming on board and how those impact Bitcoin. I view it as a much more, it's a maturation, like a maturation process. It's not the end of the old way and the beginning of a new dirty, Wall Street way or something, right? There's a lot of Bitcoiners who are very, libertarian minded like myself, but I kind of embrace this new financial world because we can't stop it. And it's sort of inevitable. And I think it's going to bring around a lot more mature players into the space.
Well said, Dan. Now, let me ask you, as far as I'm sure when you were at Texas A&M, I think that was it.
Yeah.
At the TV. When you were at Texas A&M, you were probably studying some business down there as well, and some of that probably related to the stock market. And I would ask you if you see a correlation between the trading, bullish or bearish, of Bitcoin and the stock market, because it seems that there's a decent correlation there. And as you've said, a lot of people, including, I forgot the author that wrote Digital Gold, that book.
Daniel Popper.
Yes. And great book, by the way, loved it. But it hasn't totally become digital gold yet, because when people flee the stock market, they don't necessarily jump right into Bitcoin yet. Although, to your point, there's an awful lot of money that's potentially, we know of 2 trillion in money markets right now, some of which may decide, you know what, after they're making my currency worth less every day, not worthless, but again, worth less by printing, maybe Satoshi wasn't so dumb and maybe I should have something that's not correlated. But for the time being, it seems to be correlated. Do you see that in your experience over the past 7 years of being a Bitcoiner?
That's a great question. And I think short term, we've seen some correlation, or at least a correlation increase, especially during the risk off moment where even gold dropped 15% over the course of a week. I think a lot of people were just kind of panicking, selling any asset they could to become liquid. They're getting margin called left and right. They're trying to sell any asset that's somewhat up. And Bitcoin was one of those assets. So Bitcoin, in moments of crisis, most assets become correlated. And Bitcoin became that as well. Over the long term, Bitcoin doesn't have a close correlation at all. with the S&P 500 or equities in general. It's its own beast. It's its own weird thing. And, we could look at like gold. Is it correlated with gold? Not really. Is it correlated with the stock market? Not really. It kind of undergoes its own cycles too. We see these like arcing 4-year cycles from 2000 to 2012, 12 to 16, 16 to now. And these cycles, we've seen these huge boom bust cycles happen, and they're not necessarily correlated with the macro markets. But I do think in the next few more cycles, Bitcoin does start to become more intertwined with the traditional markets, with the movement of equities and gold. That could be an inverse correlation with equities and a positive correlation with gold. As Bitcoin starts to become intertwined into these when you construct a portfolio, Bitcoin, that allocation of Bitcoin may be done in a way that builds out a better Sharpe ratio for your portfolio, right? So we might see Bitcoin start to represent gold a bit more. And I think Bloomberg had a great report on this about how Bitcoin was maturing as an asset into a gold 2.0. And one of their senior economic strategists over there put this together. And I thought that was pretty cool. So Bitcoin, he sees becoming more gold-like due to its correlations with certain things. But yeah, is Bitcoin correlated with the S&P? Short term, a little bit. Long term, not really. And, I don't think it matters too much. Bitcoin kind of does its own thing.
Switching gears just a little bit, I know that Kraken also has an institutional side, because many of the exchanges, and Kraken wouldn't be as big as it is if it didn't also do that. Many of these folks have basically gone out and created a pro side, if you will.
I've tried the other stuff, man, and it is gross.
Whoops.
What are you watching over there, John?
Yeah, exactly. Well, I got my daughter trying to call me up for a ride. So she's going to have to wait, Dan. But
Uber John, calling up Uber John.
That's right. Call an Uber, honey. But Pantera and a number of other really big institutional firms that have raised hundreds of millions of dollars for trading Bitcoin need a venue to do that. And one of the venues is, quite frankly, Kraken, and what you guys do there.
Yeah, Kraken. So a huge portion of our revenue comes through the API. API meaning electronically, different institutional traders send trades down the pipe and they get executed on Kraken. So for us, like, these are our big customers, and we like to focus both on them and the retail side. That's the kind of funny thing about crypto exchanges, is that they're not, they're quasi brokerages as well. So those are two like very important types of customers. Those are the two primary customers for Kraken, both equally important. And so we like to think about their needs, their issues. Pantera, we know all these companies in this space. Pantera is really unique because you had like a former Tiger Cub, Dan Moorhead, who created that, and they were one of the first, institutional companies in this space, their first like crypto hedge fund, if you will. And we've seen others as well, like Travis Kling from Ikigai Capital. He's a .72 guy. Ari Paul from Block Tower. He comes from, I think it was like the University of Chicago board. So, really cool to see this space, like have these professionals come in and become more and more professionalized, but also still keep those roots, those core crypto roots. And I think our founder, Jesse Powell, is still very much that original kind of libertarian roots. And I think that's great, because when you buy into crypto, you buy into Bitcoin, you're buying that narrative of like, okay, this is kind of against the traditional financial system. This is a vote for you, a vote against central bank money printing. And so I think Kraken still epitomizes that in the way that we approach privacy and security, is like at a certain level that I think meets that standard for those folks who are kind of paranoid about their information and how secure things are. But yeah, the institutional side, we're super bullish on that. We've got the Kraken Spot Exchange that they like to trade on. Also, we have Kraken Futures. That's just for European traders over in the UK. We have an FCA license. And so those are the two primary ways that we interface with institutional traders. We also have a product called CryptoWatch, which is kind of like it's a multi-venue trading platform, a mix between Bloomberg and a couple other type products. So that one I think is super slick. I don't know how you check the price of Bitcoin, but I highly recommend it. It's a free product, and if you trade on it, that requires a monthly subscription. But at Kraken very much, I think, solves unique problems both on the financial instrument side of like what they can purchase and manage the risk with, but also like trade execution with CryptoWatch.
All right, CryptoWatch. I've got to go there. I have not been there, Dan.
Oh, it's my favorite. Before I joined Kraken, it was my favorite way to check the price of Bitcoin. I'm not just selling it because I work at Kraken. I honestly love the product. My first product I built in the space in 2013 called Zero Block. It's what I would have built with Zero Block if I had been given the time. I sold it too early though, and I wasn't able to see my baby become what it was supposed to be. So CryptoWatch is that for me, and that's why I love it so much.
Very cool. Back to institutions just for a sec, because they dominate so much of the stock market. Institutions do. They're anywhere from 78 to 88% of all trades are either algorithmic, high frequency, and some low latency hedge fund trading. And the rest is a combination of retail and big, endowments and things like that are committed by TIAA, CREF, and other large groups like that, ETFs and so forth. So in other words, the stock market, Dan, I tell people all the time, it's all institutional. I mean, anybody like Robinhood's also based out in your city, which used to be my city, folks. I used to live out in San Francisco. I was born there. And now Dan's the lucky guy that lives out there. And I live here in Chicago where it gets to 20 below zero at times during the winter. So that's when I really miss San Francisco, Dan. But Robinhood, it's been in the news the last few days because they do so much of the short-term trades. It was really funny, Dan. They were saying sort of like day trader Dave Portnoy over at, and I love day trader Dave,
yeah.
But when he was saying, this is the easiest game I've ever played. Warren Buffett, you suck.
I thought that was hilarious. I mean, look, he's going for eyeballs. He's going for gasps. And
Yes.
He got it, right? It was a brilliant strategy. I mean, he's gotten more attention with him day trading. Like if you had bought those impressions using marketing spend, I bet he's made more money like with the free advertising than he's even traded total. Like the amount of like visibility he's gotten doing this is incredible. You couldn't even pay for that visibility with a multi-million-dollar marketing campaign.
Right. Yep. You're exactly right. And many folks had focused in on him, day trader Dave Portnoy, and other folks, some of whom are coming in through firms like Robinhood, zero commission brokers and that kind of thing, and saying, well, they're really outperforming and they're moving the markets and this and that. And I said, no, not in our markets, they're not. And it's not because I'm not the guy that moves the markets either, Dan. I'm saying that money is too big. Like when Dan talks folks about, doing billions of dollars of business on Kraken, which they do on busy days, clearly they do that. But when that happens, that goes like this in the stock market. I mean, the stock market trades billions of dollars on the opening print every day. So to think that a bunch of kids or even adults with $2,000 accounts at Robinhood are moving the markets, again, I'm not saying they couldn't be smarter than me. They might be, but they're not moving the markets. If you think they are, then you are definitely not smarter than me.
It's a mainstream media narrative. They want to paint the irrationality or perceived irrationality of the markets on a group of degenerate retail traders, right? And that's how they're painting them. And Dave's like the perfect spokesperson for that. I like Dave, by the way. I love his.
I do too.
I think it's funny. It's clever. And so I think like we're definitely seeing that. We're seeing the mainstream narrative the mainstream press not understand what's going on, and then painting the hordes of unsophisticated retail traders, creating this crazy irrationality. But underneath that is the true narrative, right? Like what is the real narrative? And to determine who trades where and like what moves the price, as you know, is almost impossible. Like a butterfly flapped its wings and Tesla dropped, right? It's really tough to prescribe a catalytic event in terms of, specific cutoff time. So yeah, I think that the retail traders do play an important part, but you're right. It's mainly institutional folks, and the retail traders are like kind of like little minnows in a big sea of big whales.
How big is it on your platform then, Kraken, as far as how big are the institutions? Like I've said, 85% institutions, and then some very small percent of the remaining 15% are retail. How much for you guys when you look at institutional trades versus the fractions of a Bitcoin trade?
Yeah, that's a good question, and wish could answer it a little bit more. I know that we're a little bit protective around some of those metrics, but I
Okay.
think directionally, you're right. I think with the institutional traders, they represent a large portion of volume. I can't break out the exact splits, but it is a very large portion.
Mm-hmm. Well, I've let me see. I know I've got to be cognizant of your time, Dan, because you've got things to do. You got a big company to help run, and we really appreciate your time. Do you guys have any innovations that are just coming our way right in the next little bit that you'd like to tell us about, or that you're able to disclose to us at this time?
Appreciate the opportunity, and we've got some, Kraken. I think we've had some user experience issues where our product hasn't been as easy to use as others in the space. So in the next couple of weeks to months here, we're about to launch some new interfaces, new ways to interact with the Kraken product that are much easier. So I'm really excited about that. And I'd recommend everyone stay tuned to our social media channels or our blog to see the upcoming features that we're about to launch.
Beautiful. Well, Dan, I really appreciate your time. Thank you for joining us today. Folks, I've been having a nice conversation with Dan Held over at Kraken. Dan is the head of business development over there, and can't encourage you enough to check out the exchange and maybe to share this video with some friends, because Dan dropped some nice information bombs there, especially about Crypto Watch.
I was a little subtle with that, right?
Very subtle. No, I love that. Thank you very much, Dan. Enjoy the rest of your day, my friend. I look forward to meeting you in person at one of these events, one of the crypto events that are going on once everybody can get back together and get the heck off of Zoom.
Sounds good, John. I had a pleasure today. Thanks for having me, and looking forward to those beers sometime in maybe New York or Chicago.
Beautiful. Thank you, Dan.